I'd like to call my panelists up onto the stage to talk about how the green energy transition is fueling demand. So we have Helen Brume, Director in Project and Asset-Based Finance at Afreximbank, Andrew Trahar, Partner at Vision Blue, Vinit Lakhani, Head of Base Metals at Tata International, and Shishi, Director of Zeta Resources. Let's start, though, with a few quick introductions. So if you want to just kind of give a brief overview of who you are and what your kind of role is, that would be great. So Shishi, maybe starting with you.
Hi, my name is Shishi. I've been involved in the mining industry for 25 years, first as analyst, and so been involved in most of the metals, including critical metals, for the last 10 years, specifically in lithium.
Andrew Trahar from Vision Blue Resources, which is a mining investment fund focused on supporting and financing the production of minerals required for the clean energy transition. So any mineral that goes into a battery, a solar panel, a wind turbine, that's what we're interested in.
Okay, my name is Helen Brume. I'm the Director for Project Finance and Asset-Based Finance at the African Export-Import Bank. We're a 30-year-old institution, a development finance institution. Our primary mandate is to promote the development of intra-African trade on the continent, but we recognize that in delivering on that mandate, we need to also support large manufacturing and trade-enabling infrastructure, of which mining is a key component. So we're actively supporting the mining sector across the continent. Thank you.
Vinit Lakhani. I am from Tata International, which is the trading arm of Indian Tata Group. I run the base metals and critical minerals trading division for the company. Initially started off as a base metals trader. Now we are slowly trying to expand into critical mineral space with a lot of focus on Africa. Personally, I've been involved in investments and commodity trading for almost 20 years now.
All right, great. So thought we could just start off with a quick overview looking at, there's a lot of global market forces that are impacting, pricing, but then also supply and demand right now for kind of these key battery metals. So do you want to talk a little bit about that and see, what are some of the biggest impacts that you're finding right now?
I guess the first, for battery metals specifically, we're just seeing better battery design, and the cost keeps dropping. And we're expecting more cost dropping. In terms of lithium, it's dropped about 90% from the height. And then EV, of course, is driving. We're seeing last year, 1 out of 3 cars in China is EV. And there's a big push for China to export that to Europe. America, not so much because of a tariff, but really seeing a huge transition into better capacity, faster charging, and more export-oriented. And this 2024, we're going to see even more in terms of performance, and battery costs continue to drop.
Yeah, I think I'd add that, obviously the Inflation Reduction Act is a very interesting policy that's come into play. We're seeing more activity from strategic government-led initiatives. But at the same time, we're seeing a withdrawal of capital from institutional fund managers, once again, dumping listed stocks, capital availability, even for private assets, being quite hard to secure. So I think, the roles of private equity funds like ourselves, government-led initiatives, strategic financing is going to be pretty key here to actually enable this transition. I think that one of the interesting challenges on pricing is that we've seen a big drop in pricing, but it's because a lot of these gigafactories are still being built. We've got hundreds of them around the world being built, and yet the miners have responded very quickly. They've done a great job of producing the minerals required for them, but a lot of these gigafactories are only coming online in 2025, end of 25, 2026, 2027. And so you've got this mismatch in sort of timing and supply and demand that I think we're going to see a big reversal of in due course. So we're going to have very, very volatile pricing, I think, for the next year to 2 years. as we try to see the market find a supply-demand balance.
Okay. I mean, like any other industry, the interplay of supply and demand play a key role. But I think underpinning all of this is the fact that there's an estimated $10 trillion dollar gap in the industry. And when you look at the inflationary pressure increasing the cost of production, you look at the trend around better compliance with ESG, more scrutiny around sustainable mining practices, child labor, all of that puts pressure on it. And then obviously you have the growing electric vehicle industry underpinning and sustaining that demand. And I think, for the most part, we're seeing a lot of manufacturers seeking to lock down their supply chain in terms of where their minerals are going to come from, and they want to go into this long-term offtake contracts to secure the mining resources. But at the same time, the suppliers of those resources don't want to give up a lot of the upside by entering into this long-term contract. So they would tend to build in those prices at the beginning, and that's obviously would increase the pricing of some of these commodities. Thank you.
The battery minerals have always been around, whether it's lithium, cobalt, or manganese, and nickels of the world. The price has been predominantly determined by global supply and demand. So that's always been the case. But now what's happened over the last couple of years is because of electric vehicles coming in, because of the focus on net zero energy transition, the demand for these metals and minerals has absolutely exploded. And obviously, as Shishi mentioned, the price for lithium went up tenfold in the last 2-3 years, only to fall back 90% in the last 6 to 12 months. So I think the price for these products will become very volatile. Historically, they've been relatively more easy to forecast. Now it's very tough to forecast, primarily because of the current demand and the perceived forecast of demand. And secondly, the supply chain for these battery minerals is extremely concentrated. You've got case in point as lithium, for example. You've got mines all over the world. Most of it is coming into China for processing. When it comes to graphite, China is controlling all the processing capacity. And because of such concentration in supply chains and the huge gap between the upstream and downstream and even potentially midstream, there's a bit of a lag. And because of that lag, you will see, as a trader, I can tell you that there are no future markets to protect yourself from pricing. So these lags and the gap between upstream and downstream will continue having the price very volatile. And not to mention that nobody can predict the future, but technology is also an important thing. For example, a couple of years ago, cobalt and nickel were the flavor of the season, right? Because NMC was always there. But suddenly the mass market shifted towards LFP chemistry, and nobody's talking about cobalt and nickel prices. They've been the worst performers for the last year. They are expected to be worst performers this year as well. So a lot of it will also depend on technology, on the battery chemistry, and what actually gets accepted at a mass scale.
I mean, you've brought up kind of these critical supply gaps in a lot of these key battery metals. So I'm going to skip around in my question set, but I thought we could look at where we see that supply potentially coming from, and then also maybe looking more geographically within the African continent. Do you see a lot of opportunities here to kind of help fill those gaps?
Well, for the lithium, traditionally it's just Australia and Chile. But now we're seeing a huge supply coming out of Zimbabwe, the 3 mines that's basically commissioned last year. And we're also seeing Mali, the famous one, Gulamina, coming imminently on stream. So we're seeing new supplies coming out of Africa in spodumene. And then Africa pretty much has every critical mineral. So I think if you just go to Congo DRC, it's like the museum of all the minerals. So when we have germanium, right, Jacqueline just said they're going to be taking out of the slag, and that's 30% of germanium. So there are lots and lots of opportunity in Africa for critical minerals.
Yeah, I agree. I think that Africa presents a fantastic opportunity on the mineral front. Obviously, Latin America is really growing. Adding to what you were saying about lithium, also, Brazil now becoming a credible lithium player. But at the same time, we're also, proudly involved with a rare earths mine that just started production in Brazil, Serra Verde. Very exciting, an ionic clay, just like the Chinese ionic clays, but actually in Brazil. So that's pretty exciting. We're also seeing opportunities in Africa. Similarly, we have a mine in Madagascar that's just started production and is ramping up and commissioning its graphite mining operation. Also looking to go downstream into anode production, next source materials. So, we've got some very exciting opportunities coming out of new regions. And at the same time, some of the traditional players also are providing opportunities, like Australia, of course. But I think really the challenge for Africa is how to enable the improvement in logistics, reduction in bureaucracy, how to cut down permitting, and actually allow Africa to be a continent that steps up and becomes part of the sort of leading jurisdictions to actually decouple from fossil fuels. And so I'm very hopeful that with investment in infrastructure, hopefully coming from Afreximbank, we can see an improvement in supply chains, an improvement in Africa's competitiveness. I mean, one has to acknowledge that places like the USA, for example, have incredibly competitive energy costs from a downstream processing perspective. We can't just we've got to look at that as well, because we can't just talk about the production of the mineral itself. We've got to also look at where the actual downstream processing is going to take place to allow all of these battery gigafactories and renewable power developers to build their businesses. And I'm also concerned about Europe. Europe has high energy prices. I struggle to see how Europe will be able to make itself competitive, whereas the USA and the Middle East are able to offer fantastic platforms for downstream processing. Yeah.
Yeah, just to echo what has already been said, I mean, 70% of the resources needed for decarbonization will come from the African continent. And you have your usual suspects like the DRC, obviously Zambia. I understand very large reserves of copper was recently established using AI technology. Nigeria is also a place to watch out from. They have high lithium reserves. They just need to get their act together and figure out how to monetize that. But I think what is important in terms of what's at stake for the African continent is how can we improve the value addition, right? For so long, Africa has been a resource point where minerals are extracted and the value is created outside the continent and then re-imported. So it's time for Africa to do things differently, enter into more sustainable partnership, more sustainable mining practices that puts additional value on the continent. And I think that's where Afreximbank, obviously, like you said, will play a strong role. Thank you.
I'll pick up from where Helen left. So I think Africa is and will always remain where the supply chain starts, right? You'll mine whether it's copper, nickel, cobalt, even lithium potentially. Obviously, Africa has been a bit slow in developing lithium assets, but I think over the next couple of years, we will see a substantial amount of raw minerals being produced and processed to a stage where they can be shipped out from Africa. But as she said, a lot of value is shifting out of Africa to countries where the actual processing is happening far, far away from African continent, potentially in China or Far East. So the real challenge, and I'd personally like to see in the next 5 to 7 years' time, by 2030, some of these minerals can actually, if they can actually stay back, and if not, downstream, maybe at least some midstream capacity is being set up. We have seen that happen in more established products, like for example, we have seen some sort of copper processing happening in DRC and Zambia. We have seen cobalt as well. We have seen some of the more traditional minerals like manganese and chrome they have started. There are substantial processing capacities sitting in the continent, and hopefully we can see some of these battery minerals and critical minerals, even including rare earth for that matter. It'll be good to see some capacities being set up in Africa, so that it's just not the starting point of the supply chains. It can add some value and then ship those products out.
I mean, looking at these, the supply chains and the entire kind of EV battery value chain, do you see initiatives, maybe government initiatives regionally, to help establish more of that kind of top to bottom value chain here?
Specific to Africa?
Yes.
I feel like maybe the country Morocco, there seems to be like a lot of people trying to move there to take advantage of the RIA, and OEMs also moving there as a potential. But I'm not sure if on the government side what incentive. But from Asian side, because the whole EV energy transition metals is very much dominant by China. So I do think, just recently saw Korean government gave $10 billion for LG, SK, and other Korean just three companies. So Korean companies are looking more also take advantage of the RA. So there are a lot of competition. In the battery space, there's just basically three countries, China, Korea, and Japan. That is the lead. So I'm also seeing more from the Japanese government and the Korean.
Yeah, I think that my view is that the African nations are not doing nearly enough. And I think they really need to step up their game to encourage deployment of capital, strategic government support, because all that's going to happen is that we're going to lose industry. I mean, think of the fact that South Africa has a large automotive industry. And if South Africa doesn't support the development of gigafactories in the country and the transition to EV vehicle production, it's going to fall behind the curve. And actually, a lot of industrial strategic support came from the South African government back in the day to support the original creation of the automotive industry in this country. Now, I'm hopeful that we will see that kind of action coming from South Africa as a case in point. But I think that it's encouraging to see increased activity from the likes of Afreximbank, the likes of African Finance Corporation, the IFC. Okay, it's not an African led body, but still we are seeing intent from financial institutions on the continent or closely linked to the continent to try and ensure that Africa does become a creator of the downstream supply chains. Otherwise, if we don't do that now, it will be lost to foreign processing.
I mean, we know the government has a critical role to play in terms of setting the tone to encourage investors, putting in the right regulatory framework. But I think partnerships will play a key role. And, that's where obviously institutions like Afreximbank comes into play. We've entered into a partnership with the DRC and Zambia, where we're going to be helping them in their battery electric initiative. We're building a battery precursor pack. We have committed $1 million to the feasibility studies. The results were released sometime last year. And this is a partnership involving Afreximbank, the AFC, UNECA. And the idea is to create a free trade zone that straddles both countries and essentially attract manufacturing companies to come and manufacture those batteries, which speaks to my earlier point about improving beneficiation on the continent. So yes, the government has a role to play, especially with respect to political stability. I mean, we've seen what's happening in some of the Francophone West African countries like Mali, Burkina Faso. So all of those kind of they tend to spook investors. But one of the products that we also deploy at Afreximbank is providing some kind of political risk insurance, because we know the continent and we know that countries go through their different phases and different life cycles. So in terms of providing that instrument that gives comfort to investors is something that we do very regularly and frequently.
I'd like to compare it to what happened in Indonesia about 10, 12 years ago. Indonesia used to be something what Africa is doing now, right? Exporting a lot of raw material in ore and concentrate form to other countries where downstream processing was happening, whether it is copper or nickel or cobalt and even manganese for that matter. So the government suddenly came up with a new mining law which restricted the import. Obviously, there were certain timelines being set that you've only got a certain number of years beyond which you have to start investing a certain amount of capital. And after that, beyond a certain time frame, you'll not be allowed to export anything other than finished products. So it was a bit of a shock to the commodity universe at that point in time. But Indonesia had a fairly decent banking system, a reasonable I won't say state of the art, but a reasonable level of a law of the land, which made that possible, and it's been a very great success story right now. That attracted a lot of investment from foreign investors, both Western and Asian investors, and Indonesia is right there at top of the map when it comes to export of a lot of these processed minerals and metals. So I think the similar thing needs to happen in Africa. Sure, Africa is a lot more diverse. It's not as unified. I mean, it's not one country. You've got multiple countries, multiple politics and laws to manage. But I think with the support of banks like African Exim Bank and a lot of other multilateral institutions, I think this can be made possible, because unless you get debt capital into the market, unless the projects for these unless these projects become bankable, you can't fund these projects out of equity. You need to set up a framework, regulatory and infrastructure-wise, which makes conducive for foreign investors to put their equity in, and with the view that these banks will come in and support from their side of financing. And I sincerely hope something like this. South Africa has done that fairly well. And hopefully, with the help of South Africa, some other African nations also come up with similar policies and try to develop local processing. But it all starts from regulatory push, which might come as a shock initially, but I think it'll be good for the long term.
All right, so I want to change the focus a little bit to looking a little bit more at the funding aspects. Let's look at where the financing is currently coming from. For these kind of key critical and battery metals. So, and also, as investors, what do you look for when you're, maybe assessing companies within the sector? Anyone who wants to start?
I'll go first.
Okay.
It's interesting to see new entrants into this space. We're starting to see activity come from even the oil majors, which I think blindsided us, and it's pretty exciting. We're also starting to see, and have over the last sort of couple of years, activity from the automakers themselves, the battery producers themselves. These are new entrants into the mining space that we never had before, and thank goodness that we have them, because so many of the commercial banks who were sort of key supporters of financing these projects just evaporated after the last commodity crisis, and some of the traditional institutional fund managers disappeared as well. So it's a breath of fresh air to have new entrants in the space to collaborate with. At Vision Blue Resources, we have met with a number of OEMs and had constructive dialogues with them. I think many of them are trying to work out how they play this space. Pure equity, prepay, loan finance, offtake. How do they actually play the space? How do they support? How do they get good quality assets? And the trickiest thing, of course, is that as an equity investor like ourselves, how do we find the right deposits that are going to produce the right mineral? And that's where working with an automaker can be very helpful, because we need to make sure that whatever we dig out of the ground is going to meet the right spec and grade for the customer. It's pointless us digging up, loads of lithium that doesn't actually hit spec, or a lot of graphite that doesn't hit the right spec. And so that's going to be the major challenge for equity investors in this space, is how to actually get exposure to the kinds of mines that are going to hit the grade. It's very different from iron ore, where you can produce any iron ore, it'll be saleable at a price, And so what do we look for when we invest in a business? We look for an ore body, of course, that will produce spec. We look for a management team that will be able to campaign the asset. And obviously, these are challenging jurisdictions quite often. And we look for a commitment from management teams to best practice ESG standards. Because in today's world, it's not acceptable to campaign an asset without a high adherence to best ESG practices. And we think that ultimately, in due course, the customer should pay a premium for that. And we hope that that actually evolves in pricing to be a key characteristic. Now, of course, we also need the right logistics infrastructure in place. We need to have a project that's not overly difficult to build from a CapEx perspective, because otherwise we land up in a challenging financing environment that we have today. No matter how good your project is, if the CapEx is too big, it'll be extremely difficult to finance it. So those are a few of the examples of things that we look for.
Okay. We have a question from the audience.
Yeah, just a follow-up question on that point. I was going to ask you later anyway about how you, as a equity investor in the critical minerals space, how you're thinking, or how concerned are you about the innovation around the technology? We spoke about the leaning towards LFP, and there are so many stories going on in terms of new technology, and where are we going to be in 2, 3, 5, 10 years time? But layering on top what you were just saying about these conversations that you're having with the OEMs and the car manufacturers, what are those conversations like in terms of committing to certain types of minerals, base metals, rare earths? How are those conversations in terms of you and them making big bets? How do you think about that?
It's a really good question. And it's a constantly evolving challenge to keep on top of it, to be honest. And we work really hard at that. What I'd say is that we like to bet on proven, adopted chemistries. So, the gigafactories that are being built today, they're being built on a nickel, cobalt, manganese chemistry or a lithium iron phosphate battery chemistry. So that's what we're banking on. I think it's very dangerous to play the technology gamble. And that's what we try to avoid. There are hundreds of billions of dollars going into building gigafactories that will be configured to receive those chemistries, produce those kinds of batteries, and that is the kind of commitment that is being made by these automakers. And there's good reason for it, because those are the batteries that are proven, that are working, and that they're willing to commit capital to. To reconfigure those gigafactories is extremely difficult and very costly, by the way. So we're betting on proven chemistries. We're looking for assets that also will produce them, obviously in a very low cost manner. But I think we do have to take cognizance of the evolving nature of how those chemistries, particularly on the cathode side, in a lithium-ion battery, a nickel, cobalt, manganese cathode, has sort of fluctuated. And we've seen, obviously, a significant reduction in cobalt, potentially a bit of an increase back in cobalt as we go for greater range vehicles for a US market customer, for example. And so, that's giving us confidence that cobalt is here to stay. But many of the automakers are quite comfortable that they're going to produce different vehicles for different customers. They'll produce combustion engine vehicles for certain customers who aren't comfortable with range anxiety. They'll produce a nickel-rich chemistry battery for a customer in the US or Europe, for example, who wants to make sure they can do a 400, 500, 600 mile range. And then for city runarounds globally, they're happy to have a lithium iron phosphate, lower cost product. And I think that we need to be probably a bit more relaxed about the fact that different chemistries will enter the space. And as long as we're supplying the minerals for all of them, then we've got an industry that's relevant. Now, on the graphite side, we love graphite because it's in all the lithium ion chemistries. Now, that's for us a sort of example of a sure bet from our perspective. On the other hand, what's quite interesting is that there's increased talk of silicon anodes. Silicon anodes. Now, I've met some of the silicon anode producers and I've asked them how much of their silicon anode is silicon, and they've told me 10%. And I asked how much of the anode, what is the rest of the material in that anode, and they told me graphite. So I thought, well, that's a bit odd. Why do you call it a silicon anode? And they said, well, it sounds pretty good for marketing purposes. So, we've got to deal with the reality here, and that, there's still going to be nickel, cobalt, manganese, graphite required. We've got a silicon business, so we're delighted if there's more silicon adoption, and it helps with range. Obviously, it increases the adoption of EV vehicles anyway. The other part of your question, to answer that, how are the OEMs approaching their engagement with this space? And I can say that we're seeing a lot of volatility in the strategy from the OEMs, and it's quite difficult to see clear direction from many of them. Some of them who we speak to have a clear direction, they're focused, they know where they want to go, and they've committed to it, and that's refreshing. But I think we're going to see a lot of movement in the strategies of the OEMs, and so we'll just have to watch it because it's evolving a lot.
So what do we look for? Obviously, we look at the quality of the assets. The better the assets, the better your chances of extracting value from it to pay back your loan. We also look at jurisdictions. And not because we're uncomfortable with certain jurisdictions, but obviously having a favorable jurisdiction already sets the tone for how your financing or your investment is going to play out, and how the operators are going to be able to work on those assets. We look at ESG practices, and I spoke about sustainable mining practices earlier on. We look at the sponsor's commitment to setting up an abandonment account, because too often we see mines abandoned, and the impact on the community is completely devastating. So we look at that, how committed are they to also developing their community that they're operating in. And finally, we look at the infrastructure supporting the area in which the mine is going to operate, the access to roads, and just general logistics. How are you going to evacuate your product? How cumbersome is it? Do you need to put in extra financing to build a logistics framework? And I think that's a nice segue into some of the tools that Afreximbank employs, if you permit me. So I talked about the fact that we provide political risk insurance to support financing. We also provide other guarantee products. We can guarantee ECA funding coming to support projects. A couple of years ago, we set up a project preparation department, and this is actually focused in providing early stage project preparation costs to support early stage project development. And it's structured as a loan, not a grant. And the idea is that the loan is paid back when you reach financial close. And we've taken this a step further by partnering with other DFIs and like-minded institutions to create a joint project preparation facility with the option to convert it to equity, because we know that there's sometimes the delays in reaching financial close. We also have an equity subsidiary, which we established 2 years ago, that does equity funding. They started out with an initial capital base of about $800 million, and they can do up to $50 million equity in one project. And then obviously your traditional senior debt instruments, we can do tenors of up to 12 years. Our single obligor limit is about $1 billion, but obviously our sweet spot is anything under $300 million. Thank you.
I think Helen's going to have a very good banker's perspective. I didn't know until now that you had an equity vehicle as well. So that's good to know. So look, obviously Andrew has covered a lot. So I'd just like to, my personal view, what I've seen over the last, let's say, 18 to 24 months, particularly where investments really ramped up across the supply chains. I see a lot of gigafactories, a lot of money going into setting up gigafactories, whether it's through the IRA money, private equity, or even OEMs, and in certain cases, even EV makers. But to feed into these gigafactories, I don't see the comparable amount of investment getting into the upstream space, into the mines. I think that's where, according to me, I think the miners are lagging behind in making investments into new projects. We've only see a handful of projects being announced by the major miners, whether it's lithium or cobalt and nickel and all that. So that actually really worries me. It shouldn't happen that by the end of this decade, we have all these gigafactories being set up, but not enough raw material to feed those factories. One thing that can potentially make a part of that feed is the supply of scrap or recycled materials. So that should hopefully take up, but I think it'll still take some more time to have that feed stock be a meaningful part of the supply chain. So my worry is that not enough money is going into the upstream, and a lot of people are focusing more capital into midstream and downstream. So that might be a cause of concern in the coming years.
Well, I'm in the battery space. I feel like in China, there are a lot more consolidation. So, for example, you only have two companies that makes 60% of the world's batteries. So CATL and BYD. And the more you move downstream to the car, the more fierce the competition, the less the margin you're making. So really only BYD makes money on cars, and the rest of the company, there's about 100 different car companies, and everybody who makes cell phones are now in China making EVs. And the amount of innovation is incredible. And every year I'm seeing better battery design, not just chemistry, just how you pack things. The Blade battery, for example, or Chile, this year's model, it's like iPhone. Next year, you're going to get a new one and better performance. So as long as we make a product as a miner that qualify either lithium hydroxide or lithium carbonate, I'm sure there is a battery maker or somebody who's going to take that product. So you just need to make it into a spec. The other thing is, I do have to say, because the next technological breakthrough is solid state, right? Solid lithium. So there will be no graphite. So what do you think?
Maybe 20 years from now. No, I'm just teasing. You're probably right. Maybe it'll come sooner. I don't know.
So we are getting close to the end of the session. We have another question.
Hi, Nicola Cincilli from UV Renewables. We build solar plants, so my obvious question is, because we're talking about green energy transition fueling demand, so what about silicon? What is happening in the demand for silicon?
That's one thing I think we need to look at. Silicon it has increased a lot in price, especially basically high purity sand. People never think about it, but price has increased a lot because we have a huge increase in capacity in photovoltaics for the solar cell industry. And then we also have semiconductors, right? So semiconductor purity is even higher. And I heard there's pretty much two places in the world with high purity sand, and it's Norway and United States. So there's potentially a big opportunity. Of course, you still need a lot of processing. You have high purity, but you still have 10 more steps before you get to the 99.99%. So that's an area that I think Africa has a lot of opportunity.
Well, we should talk after this because actually Vision Blue Resources is an investor in a very exciting business in the States and Canada, which is developing a super high purity silica quartz deposit in British Columbia and is going to build a large smelter in Tennessee that will produce very high purity silicon metal for semiconductors and photovoltaics. And we're a big believer in it as well. And people too often just think about the batteries, but actually we need renewable energy infrastructure, we need wind and solar, and all of that requires metals and minerals that are not in abundant supply or not sufficient supply.
And also an EV vehicle, 15,000 chips in an EV vehicle.
Okay, so really my last question for the panelists today is really, looking ahead, where do you see, opportunities, whether it's regionally, globally, what are you most excited about for the future of, the green energy transition and all of its associated metals and opportunities?
I'm always excited to see new battery technology. So I think it's not just going to be one LFP or LFPM or sodium, or there's always going to be a secret ingredient. And every year we're just becoming better and better. So we're also having higher voltage, and even your personal electronics are getting better and better. So that's a really exciting field, and we are just, beginning to see that. As far as in the chip industry, that's also dominated by Taiwan, but we're also seeing China quickly catching up.
I'd say that for me, the key thing and the most exciting thing is to see the increased adoption of all of these clean energy technologies. I love to see these huge, ambitious scale renewable generation projects, the solar ambitions, the wind ambitions. It's very exciting. It's very good for the planet. And similarly, don't forget, only a few years ago, people were laughing at you when you said that EVs were going to be a meaningful part of the automotive mix. I mean, only a few years ago, laughing at it. And it's a real thing. It's here to stay. It's being increasingly adopted. It will have its wobbles. Prices will go up. Prices will come down. Battery technologies will evolve. Gradually, we will see with scale production that the cost of the battery will become more and more competitive. And I think that that's just an exciting thing for us in the planet to see that this transition really is happening. And I'm so relieved to see that governments have taken action to really encourage and support it financially as well.
I'm just going to speak from an African perspective. When you say, what are we excited about? I'm excited about what the future holds for Africa. I'm excited about Africa waking up and realizing its full potential. I'm excited for Africa to enter into meaningful, sustainable partnerships that help retain value on the continent. I'm excited for developing new opportunities, finding out more hotspots of reserves. Obviously we know about the DRC, but there's several other countries that are sitting on all of these untapped reserves. I'm excited about attracting the right funding mix for some of these reserves. And then excited, of course, finally, about beneficiation and just moving up the value chain away from just being resource provider oriented. Thank you.
I'll be personally more excited to see recycling become an important contributor to the primary supply chains, because there's only as much mining you can do. Everyone can claim that mining is you can have solar and wind and power the mines, but end of the day there is a carbon footprint directly or indirectly that any primary feed comes with, right? So I'd like to see a more efficient and better recycling technology at scale. And the best thing about recycling is that it can be set up regionally, which is unfortunately not the case right now. Even for example, right now, a lot of African batteries find its way into Asia for recycling. It's not a very expensive technology. I'd like, so if you can recycle locally, regionally, all these batteries, electronic waste, and pretty much everything that has got any metal or mineral of value, that will not only help in reducing the carbon footprint, it'll also stabilize and streamline the supply chain, which tends to get very concentrated between the location where you find the ore and the capacity jurisdictions. So it has multiple benefits. So I'll be personally very, very passionate and excited to see recycling taking up in a more active way, not just as a feed, but also setting up recycling plants and capacities at scale in different parts of the world regionally.
It sounds great. I mean, definitely a lot to be looking forward to, both globally as well as within the African continent, for the industry moving forward. So with that, we're just out of time now. So I want to thank all of our panelists for taking part in the session today.
Thank you. Thanks.
Thank you.